people were comparing across asset classes only over a few funds, because simply there's only a few funds available. So people compare the gold fund of Merrill Lynch with the ING real estate fund, with local Indian equity funds, and there was not so much more on offering apparently. So people are very happy to have had positive returns in gold. Well, I don't think you cannot really compare a gold fund with an Indian equity fund, for instance. So that shows you that indeed it's in the early stages of development. And where my experience is concerned in other markets, I've seen that these things go normally quite fast. I've seen it I know, for instance, the Chilean market very well. They developed very fast, and now they have almost everything available. And people got used to it. And I think at this point in time, probably within 15 years or a little bit more than 10 years, Chilean investors have become, I think, among the most sophisticated investors globally. So I think as long as there's products on offering and people are happy to start buying them, and houses like ING are happy to explain what it's all about, I think it can go very fast. But there has to be more supply.
Going back to you, something which will be profitable for people sitting here. Which strategy is the opportunistic strategy in your evaluation currently?
We're in a pretty interesting economic environment in the world at the moment, in that economies are slowing down just about everywhere. In the West, economic growth is low to very low. In the US, the economy may be growing at around about 0%. In emerging markets, our growth is stronger, but is slowing. And then the other economic point to make is that in most places inflation is increasing, and in most places interest rates are increasing. And that's a more challenging investment market than most. Generally, if economies are growing, this is a good time to be investing in equities. Generally, if economies are slowing and therefore interest rates are coming down, bonds are more attractive. But if economies are slowing and inflation is increasing, that certainly makes the environment more challenging. We are very cautious on particularly the developed markets, the US and Europe, where we see the rates of economic growth much lower and slowing. And so that is an area of the world that we would be cautious about at the moment. Where we see higher levels of economic growth are actually in emerging markets, even though we see some challenges of slowing and also inflationary challenges. And that would include both the Asia-Pacific region, where we're situated now, and also Latin America and